Hi, welcome to the stock analysis video for KAZ Minerals, which is a pure copper play based out of Kazakhstan on the 25th of February 2020, and the copper price is quite volatile at the moment, so it's important to understand the date this was recorded. This is a new channel. If you like the video and you like the channel, please feel free to subscribe. It means a lot to the channel and helps to develop the platform going forward. So here's just a disclaimer. Just want to be really clear. This isn't financial advice. I'm not your financial advisor. I don't know your personal situation. If you need to make financial decisions, include investment decisions, make them based on your own understanding. Seek professional advice if you need to do so, and you can read the detail at your leisure. So who are KAZ Minerals? KAZ Minerals are quite a large copper producer. They've got a number of mines, and I think just to go back to a bit of history around who KAZ Minerals are. So they're currently listed on the London Stock Exchange. They're part of the FTSE 250, but they originally were part of a company called KAZ Minerals PLC, which had a number of other assets, and then back in 2014 basically they divested a number of assets into another company, and the remaining pure copper mines became KAZ Minerals, and they've been listed ever since. So it's just a little bit of background behind the company. Now, what's good about KAZ Minerals and what started my research into them is I was really interested to try to identify a low-cost copper producer that was a pure copper play. I'm a big believer in copper as a long-term commodity. It's central to any kind of electrification which is likely to take place, and I think it's going to be one of the biggest trends going forward. It's already huge, but in the developing world it needs to happen with electric cars and electrification of other things. Copper still has a part to play also in the developed world. So KAZ Minerals are a low cost copper producer. We can see there that they're actually in the lowest 25% quartile of all the producers amongst their peers. And the other thing that then sprung out to me was that they had quite a good growth story, and the compound annual growth rate over the last 5 years has been well over 20%, which has been really, really attractive. So it triggered my interest, and of course I was interested to understand will that growth story continue, and it's actually slowed down in 2019. On the right hand side of the slide we can see revenues are growing, earnings per share are growing, and EBITDA is growing, although I'm not such a big fan of EBITDA. It can be manipulated as a metric, and when we look at free cash flow later and compare it against the debt and also the money that they're putting in for development costs, we'll understand why EBITDA doesn't tell the whole picture. But we can also see that from a mineral extraction perspective, and from a resource perspective, they've actually grown their asset base. So their resources that are measured and indicated has grown from 2018 to 2019 through acquisition. Now let's look at the fundamentals of the supply and demand of copper. This is going to be what drives the future profitability of the sector and of KAZ Minerals in general. We can see there that the primary demand, which is the yellow line, is on a smooth upward trajectory, and if we go back through history, I think it's clear that the growth in copper consumption has grown nicely at least 3% per annum for decades, which is extremely positive. Now, of course, the price of copper hasn't grown at the same rate because the supply and demand characteristics has fluctuated over time. But what's really interesting here is the supply demand side is being met by the supply through until 2021, 2022, which is in the near future. And then there's quite a challenge because there's been not so many very large discoveries. The time to permit and develop a mine is increasing due to environmental regulations and the complexity of the new mines that are being identified, the new resources. So we can see there that the green, which is like possible projects which still have quite some work to go, is quite huge, and I think that gives us favourable characteristics for appreciation in the copper price from a commodity perspective. So let's look at the copper price in a bit more detail. So left hand side shows inflation adjusted copper price. And with the dotted lines below the unadjusted price, and we can see there that when it's inflation adjusted, it's relatively flat. Of course there are ups and downs, but it's relatively flat, and that's quite helpful, because if you believe that we may enter into a period of higher inflation in the future, it seems that copper is resilient to inflation given its relatively flat line over time. However, when we look at the volatility on an unadjusted basis, we can see over a smaller time horizon, the last 10 years, there's been quite a lot of volatility, as high as $4.5 US per pound, all the way down to 2 in the last 10 years, and at the moment we're kind of hovering around 2.5. So it's important to understand that. But whilst 4.5 is kind of an all-time peak, 2.5 is still relatively high over the fullness of time, but it's not. But in the last 10 years, it's actually we're not at peak prices here, so it could be an attractive time to enter into copper. So let's look at the investment thesis, and just like in my previous video, I've kind of looked at it through a macro lens, through an industry lens, and then through the lens of the company KAZ Minerals. So macro lens, copper supply. There's limited major new copper discoveries in recent years. Existing major producers are depleting their resources, and the cost of production is increasing over time. On the demand side, global demand for copper is increasing approximately 3% a year, and electrification is likely to continue to grow this trend. The copper commodity price is likely to increase in the long term based on these supply-demand characteristics. And of course, globally, we've still got quite a lot of developed areas, particularly India and Africa, with huge growing populations. Populations where the demographic is moving more to urban areas, where the necessity for electrical infrastructure is higher than rural areas, are going to be growth drivers for copper as a part of the electrification process. Headwinds against, I guess we've got used to the fact that China in particular has been powering the global economy. What happens if China slows down? We're at the end of a long bull market. What happens if the global economy flatlines or declines for a while? How will that impact copper? And certainly that is a risk in the short term, as is the coronavirus. In recent days we've seen extreme volatility in the market caused by an increasing concern that coronavirus will become a pandemic, and it will affect global trade, and therefore copper being part of one of the main commodities traded and one of the main commodities for global demand would be at risk. Jurisdiction, Kazakhstan, it's still in the Russian sphere of influence. Is there any risk to geopolitical tension causing an impact between Russia and the West? I think, although that's potentially a negative, I would also say the geographic location of Kazakhstan is very well placed. It's got close proximity to both Western Europe, to China, to India, and so it's well positioned to supply those markets. So you have to make your own mind up, how you view that. But it's clear that it's a jurisdiction under the influence of Russian power. Currency, like all commodities, where the costs are incurred in the mines on the Kazakhstani tenge. The stock price is listed in sterling and the commodities traded in dollars, so there's an inherent currency risk. Of course, commodity risk, price of copper is intrinsic to the profitability of the project. Looking at the industry, we spoke about electrification. What's quite interesting here is some of the mines, the geology of the KAZ Minerals and the industry in general is some copper mining locations have a byproduct of gold. So low-cost copper production sometimes has gold as a byproduct, and I always think that gold and copper make an interesting hedge against each other. In volatile times, gold does well, and copper can be a risk, and vice versa. Now, the ratio of copper produced to gold produced in most copper mines isn't at a level where they have parity with each other, but still it takes a certain edge of the pain away if you have a good gold stream alongside the copper. And we can look at that when we see the KAZ Minerals production. And the positives also is inflation resilience, like we spoke about in the first one. But in terms of headwinds, environmental safety is an issue for the industry. How to extract safely, deal with waste safely, and make sure that it's done in an environmentally sustainable way. Any problems to do with that hurts the reputation and hurts the viability of the mines going forward. Another topic which is quite difficult to grasp the impact on it is the recycling level of copper is very high. And so as the price of copper increases and the scarcity increases, then recycling will play an even bigger part than it already plays. What impact that has on the supply and demand is not clear to me through my research, so I'm putting it as a question mark, so I've put it in the headwinds at the moment. And then the other headwind, copper has its moniker Dr. Copper, because it generally reflects the overall health of the global economy, which seems to be somewhat at risk over the next few years. Then looking really in detail at the company, and I think this is where it gets interesting. There's a lot to like about KAZ Minerals. The projects are profitable, so it's got proven economic projects in operation. It's got growing revenues. It's got multiple mines, so you don't have the risk that one mine might come across low grade ore and the profitability might take a hit, or the mine might have a problem with the geology or with the mining operation, which causes an issue. That risk spread over multiple mines, which gives you a natural hedge within the business. It's a low cost producer, so if the price of copper does come down, then there's still a good opportunity that it can make profit in those times. And it's got quite large long-term proven reserves, which is really good and means that you can think about investing for the long term and you're not worried that the mine's going to expire in the next 5 years, 10 years. There's a pipeline that goes out there for quite some time. So having gone through all of them, it's quite an impressive list of benefits to the company. But here's where we get some things that challenge us. The company's got a very high level of debt, and debt compared to revenue and EBIT is high. This is fine at the moment. Interest rates are at an all-time low. The company's done a good job to restructure its debt, and we'll look at that in more detail coming up. But it's done quite a good job of securing debt in the long term at relatively low rates of interest. But can that sustain if interest rates become high? Restructuring eventually will will cause them to increase their costs of interest. Development costs, they are developing projects to get more out of the assets. They've bought recently a new project, Baimskaya, and will they be able to deliver those projects and those increased development on existing assets for the budget that they've set out in their forecast to go forward? I believe this is a quite high risk. I'm not sure that they will be able to stick to the development costs for Baimskaya, and I believe that put some pressure on the business case for the acquisition. But having said that, that may be short-term headwinds, which over the long term should resolve themselves. But nevertheless, investing today, there are some risk aspects. It's got a single jurisdiction, more or less, in Kazakhstan, and it's got an environmental, risks which obviously relate to mining in general. But I think it's the first two, debt and development costs, which need more analysis. So let's look more at the debt. We can see on the left-hand slide here, taken off the end of 2019 results, we can see that the net debt has increased. We can see a large portion of that is due to sustaining Capex and expansionary Capex, as well as the acquisition of Baimskaya. So if we take out the expansion and the acquisition, then actually we end up with positive free cash flow. We end up with debt reduction over time, which is fine, but then we also don't have the growth story and the ability for the company to perpetuate its production in the future. So it can't be ignored. So the question is, what does it really mean? So then, we have to look at what's going to be spent going forward into the future, and we can see here that it looks like there's going to be quite a substantial expenditure in 2020, and then it seems to tail off in 2021. But I noticed when I was looking at the Baimskaya business case, there appears to be a deferred $225 million cost which comes with Baimskaya that eventually will be need to be paid, and I don't understand from these numbers exactly where that's factored into the calculation at the moment, and so that worries me that 2021 won't be 160,000, that it could well be close to 360,000, which means that they need to do better in terms of the profit if they want to control debt. Here's just a look at the transition of EBITDA to free cash flow, and then after taking into account expansion, Capex and acquisition, we can see negative free cash flow, nearly $600 million, which is really a challenge, and something that puts me off a little bit generally about KAZ Minerals. So I wanted to understand the debt. You take an extra debt out, we need to know that it's good and it's the right type of debt. This is actually, for me, relatively reassuring. LIBOR rate now, over the last 6 months has been about 1.7%, and then they're getting basically an average of 4.2% on top of the LIBOR rate. So the debt interest rate is actually fairly moderate for a mining company in Kazakhstan. That tells me that people have confidence that they can pay down the debt, and it's secured over relatively long term, which also gives me a certain amount of happiness that we're not going to risk increasing interest rates having a direct impact straight away. So it's really a mixed picture here. It's and I just want to try to highlight the pros and the cons around it. So Baimskaya, the fundamental question is it worth it? What's it mean? So this is one of the big investments that have been made this year, and it's likely what's going to cost money in the future. So what is it? So first of all, it's a top 10 new undeveloped copper site globally, which is really impressive. It's a huge asset, and so therefore it's one that is good for the company. The interesting thing though is where it's located and how the actual copper goes from the mine onwards, and there's a lot of infrastructure needed to actually get the copper to the market. So first of all, there needs to be new power lines. There's going to be a floating nuclear power plant provided to provide the power. There's hundreds of kilometres of new roads needed, and then there's it needs to be shipped by a port, from a port which is quite a northern port, to basically get out to market. And so there are some risks attached, and I think there's potentially some delays that will come with that. So not just am I worried will the cost of the mine overshoot, my thought process is that it will, but also the timing from a cash flow perspective of getting the benefit from the mine. It worries me that it'll be done on time, because a lot of that infrastructure is being provided by the Russian state, of course, and other parties. And of course, while they're professional and will deliver those, will they deliver them on time for the asset? And will that allow the cash flow to come in at the right time? And if not, what impact does that have on the debt and the free cash flow? So those are the real challenges here, and therefore I've put quite a large margin of safety on my target price. But I did a discounted cash flow analysis, and what I've done, which is probably a cheat in the calculation, is I've excluded the development costs of Baimskaya, and taken those out of the free cash flow assessment, on the assumption that that's not coming on stream yet for another 5 years. So I've taken that out of the free cash flow assessment and out of the growth model. Now that I'm sure has a fundamental impact on the total calculation. So I've tried to be quite conservative with the short-term growth rates to compensate a little bit for that, and then I've also put on a 50% margin of safety on the target price. But in principle, plugging in the risk-free rate and the market premium for the country, and looking at their actual average debt cost, I come out at a target intrinsic value for the share of 773, which is good because it was trading at 431, which means there is already some margin of safety in the current price. But effectively, my viewpoint is to take all of these issues into account. For my personal decision making, I would be seeking a target price of about £3.87, which is 50% the current intrinsic value per share that I've calculated. And we're probably not far off that, with the copper price coming down over recent days, with fears about the global economy and the coronavirus. It's not unrealistic that target price might be met, and if it is, then this would be of interest. But presently, it's too volatile for me at the moment. For disclosure, I do have a small position in KAZ Minerals, and it was really just a big enough position to take interest in the stock and do some of the research. But it's not really a true investment decision for me yet. Although relative valuation is also quite interesting. It compares very well against its pure copper play competitors, Antofagasta, which is based in Chile and Peru, Southern Copper Corporation and Freeport-McMoRan, as well as some of the more diversified majors, BHP, Billiton and Rio Tinto. it's significantly less relative in valuation to the mining industry, to the local Kazakhstani market, or to the UK FTSE market as well. So in general, it's a mixed bag. I think you need to take a view on how you view the storyline, how much trust you have in the management, and make your own personal decision. But for me, this is an interesting company to watch and wait and see if it hits a level that is interesting to me. But I hope you enjoyed the analysis. If you've got any comments, any thoughts, then please give me some feedback. I'm also looking to develop a more detailed discount cash flow analysis model, which assesses the net asset value of each mine. But my accountancy and time skills to actually develop that isn't ready yet, but that will be the next step to get a high level of understanding of the mining industry. But in general, I hope you enjoyed the video, and thanks for sticking with me to the end. Thanks a lot. Bye.